In Section 2, you'll find this allocation's performance summary. There are a total of 24 active models in this program that trade stock indices, metals, energies, currencies, and Bitcoin, long and short. The active models and number of contracts traded for this allocation are highlighted in green. The allocation's start balance is highlighted in blue. Cumulative net profit, life of program, trading one unit, never adding positions, and withdrawing all net profits annually, green. Maximum drawdown, measured from highest equity high to lowest low, marked to the market daily, red. Defined, if you started at the worst possible time during the life of this allocation, this would have been your largest possible loss. Life of allocation, annual performance summary. Monthly performance summary. Daily performance summary. Section 3, the monthly and annual performance table. Start balance. Monthly net performance, including unrealized profit or loss. End of month liquidation value. Net profit or loss for the year. Withdrawing the previous year's net profit. January's new start balance. Qualifying an allocation and account setup. In this example, I'm using the December 2024 Top 50 report. The allocation I'd like to qualify and trade, 5623. By clicking on the allocation number, its performance page opens. The first thing I'm going to check is the performance table in Section 2. The markets, models, and number of contracts traded. The allocation start balance. For 5623, it's 100,000 US dollars or major currency equivalent. Then the maximum margin requirement for the allocation life of program. In this example, it came in at $66,260. Next, the cumulative net profit for the life of the allocation, $1,218,120, never adding positions and withdrawing all net profits annually. Risk, maximum highest high to lowest low drawdown, marked to the market daily for the life of the allocation, $19,562. However, with contract valuations soaring, another federal debt crisis on deck, another banking crisis brewing, which by the hard numbers, when they engage, the impact is going to be far greater than 2008. And it will require the Federal Reserve to create far more than the $8.2 trillion they created from and backed by nothing last time around to buy debt the free market wouldn't touch. As of February 2025, over $7.6 trillion of this debt is still on the Fed's books. Think about this. $7.6 trillion since 2008, created by the Fed from and backed by nothing and pumped into the U.S. economy. Money supply, M2, has tripled since 2008. In other words, you now have 3 times as many dollars in circulation, chasing after roughly the same amount of goods and services. Federal debt in the United States has quadrupled since 2008. The sad part is the U.S. has nothing to show for it. You don't have to be the sharpest tool in the shed to realize that BLS.gov average reported inflation is running way hotter than 3.03%. But what will fuel by far the largest moves is the U.S.'s new administration. Good or bad, the Trump administration has a radically different agenda. Trump signed 36 executive orders within hours of taking office. As his administration's agenda engages, I see it fueling major market moves. The upside, profit cycles could be larger than the historical performance for this program. The downside, drawdowns could also be larger. We're preparing for this by taking the maximum drawdowns for all allocations, in this example, $19,562, then multiplying it by 175%. For 5623, it generates a risk tolerance of $34,233, and I'll capitalize this allocation to cover up to this amount. Think of a risk tolerance level as a stop loss based on the cumulative net performance for the allocation, which in the case of 5623, if the cumulative net loss on the settlement of any day hit the defined risk tolerance level of $34,233, all positions for 5623 would be liquidated on or before the next settlement unless the client gives alternate instructions. How we determine the recommended minimum capitalization is taking the allocation's maximum margin requirement for the life of the program. For 5623, it's $66,260. Adding in the risk tolerance for the allocation of $34,233, which gives us the recommended minimum start balance of $100,493. Capitalizing 5623 with $100,000 US or major currency equivalent at the start of trade, I know I have the maximum life of program margin requirement covered, and the previous maximum drawdown covered by 175%, which puts the account in a very solid position at the start of trade. Let me summarize this. In this example, I'm trading allocation 5623. These are the models and number of contracts traded in this allocation. Starting balance, $100,000. Out of this $100,000, I'm going to buy a $70,000 3-month Treasury bill, which is currently paying 4.28% and will make the account $2,996 in interest income annually. As the account appreciates, we'll buy more Treasuries. The objective is to have 70% of the account earning interest. After years of near zero interest rates, people have forgotten when you're trading exchange contracts, Treasuries are the same as cash for satisfying margin requirements. If you don't ask for the interest on your money, the firm keeps it. It's referred to as the float. So we've capitalized with $100,000, of which $70,000 is in a Treasury bill that satisfies margin requirements while earning the account holder interest. The defined risk for this allocation, $34,233, which generates a maintenance balance of $65,767. Think of a maintenance balance as a stop loss based on the liquidation value of the account. Should the account's liquidation value fall below $65,767 as of any settlement, all positions would be automatically liquidated on or before the next settlement. If we fail to liquidate the allocation, we would be liable for any and all losses forward. To confirm your allocation and risk tolerance, prior to the start of trade, click on link number 6 of the main menu. Open the online risk control agreement. Enter your allocation number, the date, start balance, risk tolerance, maintenance balance, account number. If an account number hasn't been assigned yet, enter pending. Name and contact information, then click on Submit. Compliance reviews and logs it, then provides you with an approval code. One of the big pluses with this program is you can change your allocation and risk tolerance level at any time. If you have questions, contact us and we can walk you through procedure. Link 1.1 enables you to track trades as they occur. For each of the 24 active models, this daily report provides its current position and entry price, unrealized profit or loss through the most recent settlement, the current session's working protective stop or stop reversal and profit objective, cumulative net profit, current and maximum drawdown for that model, life of program through the most recent settlement. 1.2 Monthly and annual performance, trading all 24 models. Updated daily through the most recent market settlement. 1.3 Daily mark-to-the-market life of program performance for each of the 24 models. Shows mark-to-the-market cumulative net profit by model. Cumulative net profit, current and maximum drawdown, trading all 24 models, updated daily through the most recent settlement. 1.4 Full disclosure of trading methodology by market and model. By clicking on any model number, a text file opens providing full disclosure of trading methodology, every day's open, high, low, close, all volatility calculations, every day's buy, sell, protective stop or stop reversal, profit objective, every trade entry, offset, trade by trade net profit or loss, cumulative net profit, current and maximum drawdown. 1.5 Top 50 active allocations. To review detailed performance, click on any allocation number. Its performance page opens with a video walking you through the allocation's performance summary, its monthly and annual performance. I've also linked a spreadsheet which will enable you to qualify performance like a compliance officer. I've embedded a video into the spreadsheet which will walk you through the mark-to-the-market daily, monthly, and annual performance. Markets and models traded in the allocation, including full disclosure of trading methodology, all supporting historical data, every order generated, every trade entry and offset for every market and model, enabling objective life-of-program performance verification. Links 1.6 and 1.7. Summaries for the top 300,000 allocations trading the 24 active models. Each line discloses net profit per unit, maximum drawdown, measured from highest high to lowest low, marked to the market daily. Current drawdown, margin for the allocation, plus maximum drawdown, which equals the minimum permissible start balance. Markets, models, and number of contracts traded in the allocation. Sorted by reward risk. Reward risk defined as cumulative net profit life of program divided by maximum highest high to lowest low drawdown. I've also provided a video with step-by-step instructions on how to read and work with these reports, and linked an interactive spreadsheet. By changing the number of contracts traded in cells I-19 through I-42, you can instantly review mark-to-market daily, monthly, and annual performance, current and maximum drawdown, risk tolerance, and required capital to responsibly trade any allocation you create trading any number of contracts. Main menu, link 6. How to define your overall account risk before the first trade goes on. Link 11. How your account balance is guaranteed plus or minus trading activity. Link 12. Our fee structure. We're advisors, not brokers. We hold no customer funds. Clients can open an account with any approved brokerage firm. We're given limited trading authorization to execute orders using a 100% objective, fully disclosed trading model to trade specific markets, contract sizes, and number of contracts, with a client's overall account risk defined before the first trade goes on. We charge no management fee. Our compensation is based on 5 to 12.5% of net new high profits quarterly. All incentive fees must be approved by the client prior to being deducted from their account. We pay all costs associated with financial hosting. Our primary is Chart VPS. They accommodate server infrastructure, security, and data management, providing us a fully integrated solution for all the automated platforms we use. We pay all platform fees. Our primary is CQG Integrated Client. They provide trading interfaces, advanced order routing, multi-broker direct market access, using ultra-low latency server-side order management algorithms with a millisecond execution. We cover these fees on every account. If you're interested in working with us, see link 9. Please complete this one-page form. We'll report back to you with approved brokerage firms that can accommodate your criteria and regulatory jurisdiction, then assign someone to ensure the opening procedure goes smoothly. If you have any questions, contact me by opening link 2 on the main menu. A page opens showing my current date and local time, best hours to reach me, and one-click contact details for toll-free voice or video chat. Off hours, email or message me and my team will answer your questions and provide supporting links for additional information and/or verification.